Mrs. Currency BC here. Silver has crashed 22% from its record high, down 17% in the past 24 hours, $1.1 trillion erased from its market cap, currently trading at $95 on ComX, gold back below 5,000. And here's what makes this absolutely critical. In our previous video, we laid out the exact technical levels to watch. We said the 150-hour EMA, add it to your chart, would act as support, and initially it did. Price bounced 10% before selling pressure broke that EMA, opening the path to the 90 to 95 support zone we identified. That's exactly where we are now. Testing if it holds or breaks to 86. I shared this live on X. If you're not following me there, you're missing real-time charts and data I can't post here. And I'm just getting started. The handle is Boring Currency on both X and YouTube. It's verified and can't be duplicated, so ignore the fakes. I don't sell anything. No courses, no signals, just unbiased information to empower independent thinking. Your feedback drives this. Comment below with where you're watching from and your price prediction for next week. I read them and will cover your questions. Now here's the part that should have everyone paying attention. While ComX silver is trading at $95, Shanghai silver is trading at $136. The Shanghai premium just hit 36. That's the largest premium we've ever seen. Physical silver in China is trading 37% above paper silver in New York. Let me say that again. Physical is 37% premium to paper. The safe haven asset is now trading with crypto-level volatility. Silver smashed $20 from $115 down to $95. Gold erased $4 trillion in 24 hours. Silver erased $1.1 trillion. This is extreme volatility. This is forced liquidation. This is the paper market breaking under the weight of leverage while the physical market is screaming the exact opposite message. And speaking of the physical market, check these ratios. The gold-silver price ratio just rose to 51 to 1. Gold is trading at 51 times the price of silver. Meanwhile, the mining ratio is 1.8. For every 1 ounce of gold mined, 8 ounces of silver are mined. The ComX vault ratio is 1.12. For every ounce of gold in ComX vaults, there are 12 ounces of silver. The LBMA inventory ratio is 1.3, so we're mining silver at 8 times the rate of gold. We're storing it at 12 times the rate in ComX, and it's trading at 151st the price. Does that make sense to anyone? And here's the kicker. The silver vaults are getting drained more by the day. Inventory is declining while the price ratio is expanding. Connect the dots. Now let's talk about what triggered this crash because the timing is suspicious. Gold and silver prices started to fall at the open of trading in China, according to reports. Then the London Metal Exchange announced it has technical issues and a delayed opening. Silver got smashed $20 from $115 to $95, right as the LME delayed its open. Technical issues, right? The LME delays open and sends silver down the mine shaft. There's not much fundamental news driving this except today's expected FOMC chair pick by Trump. That's the catalyst everyone is watching. If Trump picks a conventional Fed chair, markets might stabilize or continue selling. But if Trump surprises everyone and picks Judy Shelton as Fed chair later today, gold and silver could make a significant intraday rebound, and it would mark the end of decades-long price rigging. Let me explain who Judy Shelton is and why her potential appointment would be a bombshell for the banksters. Shelton is an economist, former Trump Fed nominee, and one of the most vocal advocates for sound money in modern times. Her ideas challenge the very foundation of the fiat financial system. She advocates for a gold standard to curb inflation and debt. She proposes gold bonds to reintroduce sound money gradually. Her ideas challenge the Fed's unlimited money printing power. Under a gold standard, the value of the dollar is tied to a fixed amount of gold. Inflation is controlled because money printing is limited to the gold reserves a country holds. Government debt can't spiral out of control because spending would be restricted by real resources. Monetary stability is restored, giving individuals and businesses confidence in the long-term value of their money. When Trump nominated Shelton to the Federal Reserve in 2020, her candidacy faced intense resistance. Why? Because Shelton's ideas challenge the Fed's ability to print trillions of dollars to bail out banks and inflate financial markets. A gold-backed system would restrict manipulation and force the Fed to act with accountability. Her nomination was blocked by a narrow Senate vote, but her ideas have gained traction. Recently, Shelton proposed gold bonds as a stepping stone towards sound money. The U.S. Treasury could issue bonds denominated in gold, not dollars. Investors could redeem these bonds in gold at maturity, bypassing the risks of fiat currency devaluation. This system would create a parallel market tied to real value, encouraging fiscal responsibility and offering a hedge against inflation. Gold bonds wouldn't replace the dollar immediately, but would lay the foundation for a transition to sound money. If Trump picks Shelton as Fed chair today, it would signal a fundamental shift in monetary policy towards sound money, away from unlimited printing. The implications for gold and silver would be enormous. BC out, and